And there it is, the closing bell at the New York Stock Exchange, signaling the end of another trading day. Not a bad close for the U.S. stock market, despite another day of record-breaking gas prices. The Dow Jones closed up about 260 points.
The Nasdaq and S&P also ended the day in positive territory. Both markets climbed by about 1%. Joining us now is Tom Kloza. He is the global head of energy analysis for the Oil Price Information Service. Welcome, Tom. So gas prices hit another record high today. What sort of impact do you think this is having on the stock market?
Oh, I think it's going to hurt the stock market. I mean, it's one of the main drivers of inflation, and it's a driver that really peaks the tempers of a lot of consumers and stuff. Having said that, there are no easy solutions to sort of stopping it. Right now, we follow a virtual price, and the virtual price is about $4.90, $4.50. The fortunate thing is that prices have actually backed off on the wholesale market in the first 2 days of this week. That's something we haven't seen for many weeks.
So, Tom, many experts are blaming these high gas costs on low oil supply, but others are saying the actual problem comes down to low refining capacity. What do you think, in your professional opinion, the main problem here is, and how can it be fixed?
I think it's a little bit of both. I mean, if you go back to the formation of OPEC Plus, which was a cartel that added Russia and Kazakhstan, that was the seeds of what we're seeing now. 2021 also saw global demand outstrip supply. And we saw closure of some refineries that I think if refining executives were able to take a mulligan, they might say, I'd like to keep it in operation and take advantage of these unprecedented epic profits right now. So my hunch is that we're going to see a respite here, but in July and August, anything goes for gasoline and diesel.
You know, for Americans who are trying to plan household budgets, how long until you think we begin to see gas prices actually decline in a substantial way, or are we in this for the long haul?
I think we're in this for the summer. But after Labor Day, we see the formulation for gasoline change, and there's some cheap ingredients that can go into the gasoline bouillabaisse. So I don't think this is the new normal. It's the new abnormal, so to speak. But then we have to worry about diesel and jet fuel prices in the fall and the winter. That could really, really drive inflation higher. And
so in the short term, it's just sort of everyone's just going to have to grin and bear it. Tom, do you think there's any respite at all to be had this summer?
I think the respite comes this month. Next month, we'll see demand surge because people are like, I don't care what's happening. I'm taking my vacation that I put off. And then August is hurricane season, and any kind of a loss of refining at the U.S. Gulf Coast could really have apocalyptic impacts on gas prices. The one thing I would note, though, is we are seeing demand destruction. We're seeing people drive less. Might just be temporary, but those high prices, California in some cases close to 7, are having an impact.
But you do make a good point about hurricane season, though, because by all estimates, it's supposed to be a nasty one. That's what we're hearing anyway at this point. Obviously, no one knows for sure. And that's the piece of the puzzle a lot of people haven't talked about yet. So you're saying if that disrupts, production, that could be disastrous.
Very worrisome. And in addition to that, you have to worry about the grid of electricity in Texas and other states not being necessarily stable with high heat. So there are a couple of hurdles we need to jump over to get through this summer.
All right. Well, Tom Kloza, thank you so much for breaking that down for us. We appreciate your insight.
Thanks for having me.